The January numbers for the Spokane housing market are in, and there's some massive changes that we need to talk about today. You all have asked for a housing market update, and so I wanted to present these numbers to you so you can make an educated decision on whether buying in the spring, the summer, the fall is the best option for you on your move here to Spokane. I'm excited to jump into the numbers with you, so let's get right into it. All right, so the first thing we want to take a look at is the number of closed sales here in Spokane. So we're going to be looking using our Domus analytics here in the Spokane MLS to kind of look at the numbers here. But you can see that in January of 2023, we had 296 closings, which was abysmal, not only compared to the month prior or the year before, as there was a 32 and a 38% difference in those numbers, but we have not seen a month with this low of sales since 2013, which really just goes to show how much the market has slowed down here in Spokane, how much interest rates have really affected buyers and what that's doing to their purchasing power. You can see here that Spokane is a very seasonal market. We have really high highs and really low lows, whether in the summer and the winter, and that is just something that we experience every single year. But our high in the peak market, generally in May, June, was lacking compared to years prior, and that's because that's right when interest rates were really starting to creep up into the mid fives. Prices had hit their peak at that point. So when buyers became more nervous, that's when we started to see less sales happening, and then it's just continued to drastically drop a lot sooner and a lot further than it usually does in any prior year. So let's see if we can predict what's going to happen in February a little bit, and we can do that by looking at how many new pending sales there are, because real estate is a 30 to 45 day cycle from when properties have gone under contract. So anything that went under contract in January is most likely going to close in February. And so you can see here that December was one of the lowest months that we've seen almost ever in the last 10 plus years. And then January actually went up a little bit to 442. So this explains why the January closings were so low, is because the December pendings were super low. We should see a drastic increase in the February closing numbers because January pendings were up quite a bit, about 40%. Now, historically, these pending sales are still low, as you can see across the board here, but it's a good sign that we're getting some more buyer activity in the market. Things have picked back up with the new year. Now let's take a look at pricing. So now we want to look at, where are sellers in this market? Are they listing their properties with the market on a downward trajectory, or are they in another playing field? So we're going to check out the median original list price. This is what sellers are putting their homes on the market for. So the interesting thing to notice here is that they have come down, of course, but there's actually quite a bit of bounce up here in January and even in December. Even like November was actually our low for list prices here. This is showing me that sellers are trying to find their own bottom of the market. They're trying to push the boundary, the envelope a little bit, to see what they can get out of buyers right now, rather than continuing to drop their price. They're pricing it at their goal number and hoping that they'll find a happy medium in between what's realistic and what they actually want. Because the interesting thing is that this is actually 1% more than what it was last year. And so the list price is actually higher than it was last year. And for this to make a little more sense on why I think this is so interesting, is let's take a look at where the median sales price is. So the median sales price right now from last year is down nearly 4% and has just been a constant drop. And so not only do we have a year-over-year decrease in the closed sales, or in the median sales price, I should say, but there's actually about a 20% gap in between what homes are currently selling for and what homeowners are listing the properties for. And so we're finding that difference from them dropping the price over a long period of time, buyers getting good deals on the property, but I'll show you in a second here, but we're not actually seeing buyers get homes under contract for 20% of the asking price most of the time. Is that sellers are starting high and then just slowly dropping their price over time until they're getting to more of the median or the average. But the crazy thing to look at is just we've had 7 months of declines here in Spokane. The top being at 460. We've almost come down $100,000 since the peak in our average sales price, and this is about the same price that we had in April of 2021. So we're almost coming up on homeowners that purchased 2 years ago seeing a flat line in their equity and needing to come up with creative solutions. And so that's something I want to touch on as a big market update here in Spokane, is that creative solutions for homeowners is something that's really prevalent right now. We're noticing a lot more assumable loans, owner contracts, things of those nature, because if somebody purchased in the last couple years, they were feeling really confident that they could just purchase something short term, and then if they had to move, it wouldn't be a big deal. But now it's kind of biting people in the butt. Anybody that has to relocate for a specific reason, that actually have to sell their house to move, they don't just want a certain number, then these people are finding themselves a little stuck without bringing money to the closing table. They're coming out of pocket in order to get their home closed. But some sellers they purchased in 2021, and so they have a really low interest rate, anywhere I've seen 2.6%, 3.5%, 4%. And so they're using these assumable loans to attract more buyers. And if the buyer qualifies, then that interest rate can be transferred to them. And then if the seller happens to be able to sell their property for more than they purchased it for, or more than just all the fees that it's going to require to sell the property, and there's maybe an additional amount that the buyer needs to get a loan on, then they would only have to get a 6% loan on that small amount left over. You, as a savvy home buyer, should be keeping an eye out to see, when did the seller purchase the home? Was it at a point in which interest rates were really good? And is it a possibility that that loan is assumable? So now let's touch on median days on market. And so very obviously, the days on market have gone up drastically here in Spokane. As you can see, that there's been a sharp increase, but it's really not that bad. I mean, we were at 3-4 days on market before a seller accepted an offer from a buyer, and they were intending to go through a situation where they were sifting through 10 plus buyers because there was so much active interest at the time. But at the end of the day, historically, this one's very interesting that we're actually still below the average of the last 10 plus years. We're only at 24 to 30 days on the market for a seller to find a buyer, which is really not that bad. I've run into it myself in the last month. Multiple offer situations are still here. They're still happening. I know my Seattle friends and my California friends are actually seeing it quite a bit, and the market has picked up a lot in the bigger markets. So that means here in Spokane, we should see that here in the next month or so. We kind of lag behind some of the bigger markets in terms of activity. But like I said, I recently had to compete against another offer on a house, and we're in a multiple offer situation. And I've heard from many of my other realtor partners here locally in Spokane that they are seeing it as well, specifically in the median price ranges, about 375 up to 500. There's quite a bit of activity in those price ranges. But again, what does this mean for you as a buyer? If you're just shopping on the MLS, most often those sellers are not insanely desperate to sell the property. They have a need to sell or a desire to sell, but they are not in a distressed situation that they have to sell. And so they're still going to get pretty close to market value of that property. Or as I'll show you in a sec, that on average, sellers are getting about 98% of what they're asking for the property. So it's really not that bad. What this does do though for investors or those situations where you do find a really desperate seller is that if they have to get out of the house in a certain period of time, if somebody is being foreclosed on, or they must relocate within a certain period of time, and they don't want to clean their property, or any number of situations, that this 30 days to even find a buyer and then be 30 to 45 days out to closing, as long as that deal sticks through escrow and doesn't fall apart and you have to do the whole thing over again, you're looking at a 2 to 4 month process to get out of your home. But if you're a savvy real estate investor, you're finding sellers off market or marketing to them, this is leading to a lot more opportunity to providing cash offers to sellers and getting investment properties, because now they're not going to just be able to list it on the MLS, find a solid buyer within a couple days, and get out of the property in under 30 days. It's very likely that it's going to take months. And so there are people in situations where months is not an option, And so this is allowing for more off-market opportunities in our market right now. So the last number I want to touch on, and it's really kind of important for you spring home buyers, the people that are looking to purchase a home here in Spokane in the spring and wanting to know, is there going to be more inventory? I've been hearing this from a lot of buyers that, yes, we do have 2 months of inventory on the market. It's much more than we've had in the last couple of years, but we've been struggling with having actually less homeowners bring their houses onto the market, bringing less new inventory because homeowners were nervous about the market as well as it was going down. So many of my clients have been saying, I see that there's a lot of inventory on the market, but I just don't like any of the houses. I'm waiting for some new stuff to come up that I'm actually interested in. And so that's been a big struggle recently. And so what I want to point out here is that we are on track. We've increased 10% from last year. And so that's actually really positive that January in 2022, we had less homeowners bring their house to the market. And then we're up 70% from last month, which December was just incredibly slow around Spokane. But I like this year over year number that January 2022, when we all thought the market was still burning on fire. I mean, that was like our second wave of peak craziness here in Spokane. And we are now seeing more sellers put their house on the market than that time. So that's a good news for buyers that are looking to purchase, is that some sellers are finding their confidence. They're getting their homes on the market, whether they are nervous about interest rates or not. They need to sell and they're getting their houses up there. So it will provide more options for you as you start your home search here in the coming months. So what does this all mean? It's a lot of numbers, a lot of information that you should take in and should absorb as much as you can. But if you're a buyer, you're still seeing the ability to negotiate, which is the greatest thing. And technically, no, we are not in a buyer's market. I keep hearing that word get thrown out there, that we are in a buyer's market. A buyer's market does not happen until we have 6+ months of inventory, and currently we're only at 2 months of inventory. A buyer's market leads to sellers getting significantly below asking price. There's tons and tons of inventory in the market. This number would be thousands versus 563 new listings, because in order for it to be a buyer's market, there has to be a lot of distressed properties. And checking out this little graph right here, the percent of distressed listings, meaning properties in foreclosure, is mostly what this means. People that are cannot pay their mortgage, must sell because the bank is forcing them. We are historically low. The percent change is 0%, or is not available, because there were 0 properties last year and 0 properties this year that are in a distressed situation. But you can see in 2013, as we were coming out of the housing market bubble, we had 20% of homes were distressed at the peak here. And at the bottom of that year, we're looking at 6%. So that is the difference between what type of market we're in right now. This is not a 2008 housing bubble, because this number would be increasing if this was the problem, because this was a buildup of years of people purchasing properties way too much, getting bank loans that they should not have gotten in the first place. These people were just coming in off of the street, getting massive checks written to them for homes that they could not afford on adjustable rate mortgages. And so they would sign at 4%, and then a couple months later, their interest rate could be 20% when the market crashed. So yes, do we have people that purchased a home in 2021, 2022 that are underwater? Absolutely. But they have mortgages that are healthy. They could afford to make those payments when they qualified. They had a job. As long as their job has stayed steady, which our jobs market is doing just fine right now, then there is no concern that these distressed properties, people are falling into foreclosure, is going to be happening anytime soon. So as a buyer, take advantage of what you can. Builders are giving discounts like crazy. A lot of the new construction has been on the market for hundreds of days at this point. And so you're getting these red tag sales, get concessions. Your out-of-pocket expense to purchase a home is much lower. You're just coming to the table with your down payment, but all your closing costs are getting covered. You're getting warranties. You're getting things fixed by the seller in the home inspection, things like that. But it's not to scare away the sellers, because if looking at all of these graphs, you can see that historically it is still a good time to sell. well. I think my prediction here in Spokane is that the early spring is going to be a really healthy market, March through May most likely, because we've seen a high increase in mortgage applications across the country in the last few weeks. We continue to get good news about inflation, which is helping steady out interest rates into the high to mid 5% range. And overall, I think most buyers and sellers are just coming to terms with that this might be the new normal, and people will always need to transact real estate. People get new jobs, divorce, die, all the things that cause real estate to happen. Those things happen every single day. And as long as there's still a healthy buyer pool, then the market's going to stay at a steady pace like it is right now. And then just a quick update on the landlord tenant laws that are going on. They were supposed to do a vote on January 23rd. That has now been postponed to the end of February. It's the 25th, 27th, something like that. Hopefully there will be another town hall. I plan to attend as soon as I hear what it is. Maybe we'll get some video footage and be able to produce another YouTube video about what is happening with the landlord tenant laws here in Spokane, because talk about more inventory coming in the market. I believe a lot of landlords are going to determine that Spokane is not the place for them to invest, and they're going to put their properties up for sale, 1031 exchange their equity into other, maybe more landlord-friendly states. And so that will free up I think quite a bit of inventory in the next year or two as landlords make that decision. That's all I have for the month of January. I hope you found this video helpful. Please like, subscribe, hit the notification bell. If you'd like to schedule a personal call with me one-on-one, there's a link down in the bio to schedule a time on my calendar at a time that's convenient for you. And the pinned comment down below is a link to our weekly newsletter where we're sending out more market update and fun things to do around Spokane, so you can start to see what culture is like here in the Spokane area as you're planning your move here. Thanks so much for watching, and we'll see you in the next video.